if I look at okay, so I mean, let me just start with my view in terms of I'll go with the economy and then essentially what I feel about markets. I personally am of the view that we are in a bear market rally. In fact, I also put out an interesting tweet by Michael Burry, the guy who known as the Big Shot, and he put out a very interesting data point about how the average bear market rally has been about 23-24% even for the Nasdaq. We are up pretty much there. It's up 23%. The Indian Nifty is actually up 16%. And if you adjust for currency, we are up not 16%, but probably about 13%. But if you look at the Nasdaq, there have been periods when the bear market rally has been as high as 40%, right? And in typical jargon, you would call that a bull market. But the difference this time around, I think one of the key issues that people generally have seen is that this is a very different scenario this time around than any other scenario. In fact, the closest scenario that we could compare our current scenario to is 1940s, when most of us were not even, even our parents were probably not alive. And the reason is that inflation continues to remain sticky. There was a very interesting comment made by the Bank of England, where the guy said that we understand the economy will go through a recession for a few quarters, but that doesn't mean we will, ease rates. We still will stick with rate hikes because inflation is sticky. And almost 40%, and we've not really today as yet seen the reduction in the Fed balance sheet as yet. Right now, it's only about the markets anticipating rate hikes. There have been a few rate hikes, but there have not been really reduction in balance sheets. As far as the Indian economy is concerned, I think let's take sector by sector. You have autos. The auto sector has, if I break it up into two parts, the two wheelers and the four wheelers, the passenger vehicles, and the CVs. Let's look at three of them. The two wheelers, has not grown for 10 years, right? I mean, 2012 volumes are still higher than what it was in 2022. Okay, and there is an argument that this is penetration issue. I disagree with that. We have markets like Thailand, where their per capita income is about three times our per capita income, and their penetration levels are far higher. I mean, they have a population of about 70 million, and they sell about 3 million vehicles a year. India has a population of 1.4 billion, which is 20 times as much, and we sell 18 million a year. So, if you were to use the same ratio of 20 times, I'm not saying we can, but even if the truth is in between 7 and 20, or 6 and 20, and we choose 14, our volumes can still grow on the two wheeler side. So penetration is clearly not the right issue. If you look at four wheelers, our passenger vehicle sales has not grown for about 5 years, which is one of the reasons why. And if you typically see the average lifetime of a new vehicle, if you go through data published by Maruti, for instance, on what is the proportion of vehicles that are bought by absolutely new customers who are buying their vehicle for the first time, it's only about 35 to 40% of vehicles are bought by the first time customer. The remaining 60% even today, is bought by the customer who's already got an existing vehicle and is upgrading, or has got is planning to buy a second vehicle. So, in some extent, if you have not had 5 years of growth, it's interesting, by the way, that Maharashtra, for instance, the peak sales of passenger vehicles happened in 2014. Right, we are in 2022. So I'm just saying that it obviously, there's certain markets like Uttar Pradesh or Bihar will, and maybe Rajasthan will continue to grow because penetration levels there are much lower. But the bottom line is that if you have had 5 years of no growth, and we are only selling 3.5 million vehicles a year, and China is selling almost 16 to 18 million, cars, passenger vehicles a year, we still have a lot more to go. And but having said that, income levels in India have not really caught up with inflation. And that is the key issue. While people are extrapolating this recovery in autos, I just want to caution them and say that, listen, this is, if you've had 5 years of no growth in passenger vehicles and 10 years of no growth in two wheelers, you will have some sort of recovery for sure, but don't extrapolate it and assume that this is a recovery for a long time. Right, I did a very interesting analysis on LPG consumption. I was actually very surprised that LPG and PNG, which is your pipe natural gas, the government comes out with data every month, and obviously there is a lot of pain being shown over there, because at least for the last 6 months, and especially in the last 3 months, your LPG slash PNG volumes have actually stopped growing. Now you're essentially saying that people are not cooking more, and they're cooking, I mean, they are cutting down on cooking because our population is still growing, right? And if your population is growing at the rate of 1.5%, automatically your consumption should at least grow at 1.5%, right? That's the bare minimum. It should ideally grow more, because penetration of LPG and PNG will grow. PNG is pipe natural gas, but that is a good way to indicate. Another way to actually track the economy is actually look at mobile handsets, and I'll give you a very interesting backdrop of what the data says. Since at least for the first at least for for example, if I look at the December quarter and the March quarter, I haven't looked at June quarters yet, but I suspect what I read was that an even June quarter sales. So let's go through September quarter, March quarter, and June quarter, and I'll try and explain to you guys how to look at things. Okay, so India, for instance, has about 800 million unique subscribers. We have a population of 1.4, but we have 800 million unique subscribers, of which maybe 850, of which about 350 are people who use their feature phones, and about 500 million who use their smartphones. Now, a smartphone holder guy might have two smartphones, and he might have several SIMs. So one should not one should look at, finally, if I have 550 smartphones and 350 million feature phones, and assume that people rechange their mobile phone once in every 3-4 years. India is a younger population, so people in the younger generation tend to change their mobile phones more often, maybe once in 2 years. But let's take once in 3.5 to 4 years. Then even then, we should at least be doing at least 200 million handsets a year. And we have touched almost there in the past, but then it has fallen off sharply in the last 3 quarters. The mobile handphone sales in India have actually declined between 18 to 25% year over year. Now, if people are cutting down on that, I mean, that's a very large decline. And so that's another way of assessing the health of the economy. Like China, for instance, I've been super bearish on China for a while, because China has a wealth effect issue. 60% of Chinese wealth is in real estate, and real estate is in deep shit, and it's really becoming bad. If 60% of your wealth is in real estate, and prices are not going up, probably going down, plus people have also invested in wealth management products that are invested in real estate paper, there they have lost money, because real estate companies are defaulting. Then they don't get really any great returns in fixed deposits, and their stock market is not done well. So if you look at the wealth effect in China, it is really bad, and that is reflecting in car sales as well as passenger mobile handset sales. I think mobile handset sales also there are down in several months for about by 25 to 30%. And so, I'm just saying that these are ways to look at the health of the economy. If you looked at the presentation made by Hindustan Unilever, while that company is obviously the best performing company in the country in terms of FMCG, I mean, they have buying power in terms of raw materials. They have superb supply chains. They have amazing thing. What's it? They have amazing. What do you say? Ability to negotiate. They have good, they actually have run a positive cash flow, because they actually get paid for their products, so their working capital is positive, and I mean negative in that sense. and they've gained market share. But if they look at their presentation, and it was, I think, slide 3 or slide 4 of June quarter results, they're saying for the last 3 years in the segments in which Hindustan Unilever operates, we have not seen any volume growth in those categories for 3 years. I mean, that, in my view, and all the increase in revenues has come entirely from pricing. In a typical economics framework, that is called stagflation. India is achieving stagflation. Another way of also assessing this, there's a lot of noise about, money, about GST numbers. But I will give you some interesting way of looking at GST numbers. The way people look at GST numbers is flawed in my view. And I also think that those who know there is a flaw will not even admit it because they're scared to admit it. And I'll give an example. You need to split up GST into three parts. One is something called the IGST, one is called the CGST, and one is called the SGST. The IGST is essentially intermediate. You and me as a customer don't pay IGST. We pay CGST and SGST. That's what we see on our bill, right? If you look at CGST and SGST, they and IGST, when is IGST paid? One is intermediate, which is usually inventory, or when you import products. So that's when you pay IGST. But the assumption is that eventually your IGST, it works as as a credit which you use when finally selling the end product. Now the thing is, if you just look at CGST and SGST individually and forget about IGST for a moment, and look at the last 2 years and do a CAGR, right, and adjust that with the WPI, you actually don't get any growth. So real adjusted CGST and SGST is actually flat to negative. And that essentially is an indication that your system volume growths are not growing. I mean, there are certain products that are growing. So a lot of people say, look at these e-way bills. That is a completely wrong way of looking at it. I would rather look at diesel consumption, because that will tell me how much more throughput is going on the roads. That is a better framework. If somebody tells me, look at road construction, if the government changes the definition of roads construction, I say, listen, if you need to build roads, don't look at roads, because the government changes the definition of how you build, they count building roads. Look at the consumption of bitumen. You require bitumen to build roads. If somebody is saying that, no, listen, guys, look at cement, consumption. Yes, but cement is still a fraction of the road construction. So don't look at, I'm just saying, try and look at things differently. I'll stop here because, I also, by the way, wrote a very interesting, um, I wrote a very interesting Twitter thread on cement. I don't know how many of you guys have looked at it, but I actually think that people are completely ignoring this entire CCI news on cement. And given the new player that has entered the industry, I actually will, for the first time, take this CCI issue very, very seriously. Yeah, I will stop there.
Yeah. So we have Ameya, Naveen, Mohit, and Samarth with us. So one by one, we'll be asking their views as well. And in the meantime, if anyone has any cross questions or maybe any addition, we can take that. So Naveen, you go next. Then we ask Ameya and Mohit, and then we go for next. Yeah. Naveen.
Thanks, Prince. I think FactFinder bought on a lot of great points, and people on this space. I think it's imperative that all of you should go through his threads. They're informative. You need to understand that we need to have that information at the and somebody's providing it. Do that. Apart from that, I'm mostly in the camp that this continues to be a bear market rally, and there are a few things that I look at it on a macro level, mostly on the global level, where I continue to look at what the Fed continues to say. See, you need to realize one thing: for the longest amount post 2009, there was this saying in the market that do not fight the Fed. And whoever fought the Fed basically lost out on one of the biggest bull market rallies the world has ever seen. Uh, so if that were true back then, it continues to be true it continues to be true right now. If the Fed is on a hiking uh, spree right now,
Naveen,
because
sorry to interrupt. Can you be a bit louder because your voice is very low?
sure, apologies for that. Can you hear me now?
Yeah, it's better, but try, I mean, speaking near the mic maybe.
Okay.
Others
I
are able to hear him properly.
Yeah, yeah.
It's
Yeah,
okay.
yeah, he's
Okay,
audible.
Naveen, carry on.
Okay. I hope you guys are able to hear me. But so the what has changed the from the last FOMC meeting? Why have the markets rallied? Why are we witnessing people? See, you need to realize most people at the current moment believe that inflation, which was one of the biggest reasons for the markets cracking, is taken care of and done with. And the Fed has already pivoted, and the way we've rallied, it tells me that most people believe that the Fed would be cutting interest rates and leading to QE sometime next year. What people need to understand is that is not the case. The Fed hasn't pivoted yet. The Fed continues to believe that inflation is still sticky. I can understand that the last month's headline inflation number was a little lower than the 9.1%. But if you actually look at the nitty gritties of their the way they compose their inflation number, the inflation continues to remain sticky, especially something called the OER, which is the owner's equivalent rent, which continues to be coming in hot and fast. And the Fed, so Fed has two mandates, right? Fed has a mandate which says inflation needs to be at 2%, and unemployment unemployment needs to be low. The last jobs report kind of tells the Fed that the economy continues to be on a strong path, and inflation is still at 8%, which basically means that the Fed has enough and more room to go on the hiking spree. Now, if you're fighting the Fed, that's up to you. But if the Fed were to believe, because even in the last FOMC presser, he continued to say that we would remain data dependent. If that were the case, I think the Fed is not stepping off the pedal yet. In terms of how it affects India, of course, uh, we need to keep believing the fact that most equity markets around the world ran up the way they did over the last 10 years based on liquidity which was provided by the Fed in some form or the other. That liquidity is now being taken out, which can actually be seen by the dollar shortages. And this was brought to me by some a gentleman on one of the spaces, Deer Point Macro. I think you guys should follow him, about how dollar shortages are working out. Another thing that uh, seems to be a risk to me is how European banks, especially something like Deutsche Bank and Credit Suisse, their CDS, which is the credit default swaps, are going haywire. So if there is a European banking crisis, there would be more pressure on the liquidity. Another thing that I track is the overnight reverse repo that the Fed window, which continues to tell me that there is a liquidity pressure. Banks in the US are unwilling to lend to each other, and that's why they're putting more and more money with the Fed. So I continue to believe this is a bear market rally. You will have spurts of this rally. Can this rally go higher? Absolutely can. I am no one. I am not intelligent enough to predict that. But uh, everyone needs to remember that macros will play a much more important role going forward than just technicals. Thank
Right,
you.
Naveen. Thanks, Naveen. So, Ameya would also love your views on the health of the economy. And do you agree with Fact Finder and Naveen? Like it's a beer, beer market rally kind of thing.
Uh, so sorry, apologies, I couldn't join earlier. There was some issue with the app. I heard what Fact Finder spoke only partially, so don't have a full context. I heard Naveen speak at length, and well, to be very honest with all of you, that I'm not a macro guy. I don't understand the nitty gritties and the entanglement of various variables that are at play at here, right? Um, but to be very honest, I don't really go on categorizing whether what kind of rally is it. Is it a bear market rally, or it's a reversal, or it's a pullback, or a clawback, or something like that? I don't go on categorizing uh, the moves given by indexes. Sometimes I feel not having that close knowledge about macro also helps. Because sometimes you say that ignorance is bliss. Of course, it's not the case all the time. But to be very honest, I don't go on categorizing whether it's a bull market again coming back, or it's a bear market rally. While having said that, I think there is another way to see. We are all invested in market for only one reason, that is to make money, right? We tend to digress from that point and get into a situation where we are trying to prove an argument. So I believe we can avoid that, and one of the ways to avoid that is if you build some of your custom long term scanners. It really helps to get a perspective, and regardless whether it's a bull market rally or a bear market rally, you anyways get on a right side of the trend, right? So I'll just give one of the examples, like you know many of the US mining companies, they were giving breakout out of those, like 10 years, 20 years consolidation, and 10 years, 20 years charts back in initial first wave of COVID. Unfortunately, nobody was giving any heed to that time, and it was very significant that all of these companies and all of these indexes were giving breakout one after the other. Um, so if you notice, that was the right time to get into all the commodities, because you would see the Nifty Metal and all these kind of indexes also kind of mimicking the trend in tandem. Of course, it happened a little late because we lag on certain aspects. But anybody who would have, let's say, looking at this aspect, have built a technical scanner, long term scanner, would have easily got into commodities somewhere in mid 2020 or late 2021, sorry, late 2020, and would have already out by now. I'm not saying that there is no steam left. I mean, please pardon me, I'm not knowledgeable enough to comment anything about it. But most of guys are like me, who don't have the macro understanding, or let's say the deeper understanding all these moving variables. They can definitely play this through some of the long term scanners that they could build. At least that's how I look at market. So that's my one of the views. And if you look at those, I mean I'll just take a more minute here. If you look at those long term scanners, and you would see a trend. So for example, if you look at Nifty Midcap 50 or Nifty 500, or even Nifty for that matter, all these indexes are giving a similar kind of a setup. I don't know whether it's coming back completely from a bear market rally. I don't know what will change overnight, whether something will change or not. But I already see that there is a possibility for a common investor who doesn't understand all these things and all these variables and all the effect, can still play this through some of these index based movements. And but yeah, I mean, you can also look at these things from a different perspective. That's all I wanted to say.
Yeah, thanks, Ameya. Thanks. So, Mohit, we also want to know your views, like how you see the health of the economy, and you heard the other speakers say. So, what are your views on that?
Hi, friends. Hi, everyone. So, I mean, I of course heard everyone with delight. Having said that, I am of the view that I just cannot predict whether it's a bull market rally or a bear market rally. I mean, I do not have capability to do that, and I'm happy to be kind of proven wrong. But I think one thing what I can certainly do is move towards where I have conviction in the longer term, which is certain of the things, and probably use this as a launch pad to pivot there. Having said that, I mean, if you look at the earnings, which are the most important things, whether that's across US or India, I would say, I mean, India has across the patch pretty much smashed the earnings, and that tells you the health of the economy rather than anything else, because at the end those are the dollars or rupee that is getting to the bottom line. Of course, we can pick up certain things which haven't done well, but on an aggregate, everything has pretty much done well. The other thing I'll like to say is, there is a massive difference between what India is and what US is. Uh, India is a developing market, which is very growth oriented. Of course, it has its own drawbacks around corporate governance and other things. US is a fairly mature market, and the inflation rates or inflation and many other things within both the economies are very different. India is at a place wherein there is not massive difference, at least if we go by what the government and the regulators or the specific institutions have to put out. There is not a massive difference between where the inflation is and where the rates are. Uh, few percentage points rather than like a gaping hole there, right? While US has to certainly catch up. Having said that, I mean, I was positively surprised with US inflation coming down, and the reason I'm focusing a bit on US is uh, because I mean that's the mecca of the stock markets. Whether we like it or whether we don't like it, that massively influences and sets the tone for everything. So if we look at that, I think the main thing to look at there was the core inflation. Energy and food is fine, and it will do what it needs to do. But I think the most important thing there to look at is the core inflation, which is essentially the wages and the labor, and some of the services part, which has come down on a month on month basis and also on a year on year basis, which is great. I'm not saying it is end or but of it. Having said that, I mean, it is always good to see the downtick. Plus, I mean, there was a bit of change in stance. When I say stance, a bit of change in language, so to say, from Fed, which is great. They have committed to 3.4 for the end of the year, or 3.5, or between 3.25 and 3.5, which is what they'll continue to do. The massive uncertainty, if at all it comes, will come from the fact that they changed and revised their targets, right? Which I haven't seen, or they accelerated or whatnot. So I think as some of the wise men said, particularly the one that I follow, which is Howard Marks, what's the most important thing that we can all do is to stay invested, and that's where I'll stop.
Thanks, Mohit. Thanks for wonderful views. So, guys, before coming to each one of you, the battery miner. Yeah, battery miner, you can unmute and ask a question, please. The battery miner.
Hi guys, sorry I was just tuning into to an interesting call. I'm just at the airport, so I'm not able to contribute too much at the moment. But I did hear that a few of you were talking about more of the commodity sides of batteries. I heard Mohit speaking very briefly about his opinion on the commodity super cycle. So it would be nice to hear a little bit more of what the others have to say about
Excuse me. Your voice is not audible. Clear nahi hai, sir.
Battery miner, can you please check the voice from your end? We were not able to hear you. Okay, he got dropped. Yeah, so one by one, I'll be coming to you guys. So, which are the investable sectors you find, have value at current point in time? So, we start from Fact Finder and then Ameya and Mohit and Naveen maybe. So, Fact Finder, over to you.
Yeah, so if I look at, I'm going with the view that, we are in a, sort of a bear market rally. And so, but if I were to take a longer term view without this aspect, then I would actually first not really invest in India at this moment. I would, in fact, I would highly recommend, retail investors in India that you should, one, try and invest more in mutual funds, because you are competing against institutional investors who have access to better capital and systems. Secondly, the most innovative market in the world is the US. And with so I would actually put money in the US for that reason. As far as specific sectors in India, India obviously benefits from IT services. I think we will go through some sort of a reset over there, and the best way to track that would be Accenture, because at the end of the day, Accenture has grown at a faster pace than all the large Indian IT companies for the last several years. And the reason is that they are the only company in the world who are able to assimilate over 100 M&As in a single year. I mean, Indian companies struggle to do one M&A in multiple years, and these guys are able to do 100 M&As in a single year. And they've been able to maintain their margins. But that's a way of looking at it. And secondly, another sector I actually believe is utilities. Valuations are attractive. By the way, I'm not recommending stocks. I'm just saying that I like utilities because valuations are attractive, and decent earnings growth. We have a shortage of power. At least I'm not a believer in renewables in India, because I think we have there is a structural issue, and I'm happy to talk about that. And so traditional renewables make sense, is what I mean. Traditional utilities make sense. At this point of time, I find most other sectors quite expensive in India. Autos was a great sector for momentum, but I think that the risks are priced in. And yeah, that's it from me. It's more international rather than India at this moment of time, because there is valuations which are in favor of other markets than India, and the data points, as I said, things like mobile handset sales, FMCG. This doesn't indicate that the health of the economy is great.
Thanks. So, Naveen, you go next.
Uh, I actually have a question for Fact Finder, if you don't mind me asking, and it kind of relates to the sector that I am kind of a little bullish on at the moment. Fact, if you may, do you think the Indian government over the next couple of years would increase their defense spending? Because I am looking at the defense sector. I understand the valuations look a little rich, but if there is a little more spending towards the defense side, do you think that is a sector that one can look at?
I was looked at, honestly, I looked at the defense sector almost 3 years ago. And that was primarily because that was the first time there was evidence that the government of India, at least, I'm not saying it's the first time, but for the previous 6 years, the government had consistently actually cut down on defense expenditure. in absolute terms. In fact, if you look at defense expenditure to GDP, we actually fell to a 40-year low, I think sometime in 2019 20. But after that, there was some sort of a recovery, and it was after several years that the government said we will explicitly start procuring defense equipment from some of the indigenous. But bear in mind that these defense projects have a long gestation, right? You don't get revenues instantaneously. It just doesn't work that way. If you're talking about defense expenditure which has got a higher quantum of R&D, the companies, like globally, defense companies earn a very high margin, because there is a fair bit of maintenance and R&D involved in that, and technology transfer, which is why they get such high margins. But so that is kind of trickling down right now. It'll take time, but yeah, I mean, uh, given the fact that our defense expenditure to GDP has fallen so many years, 2 3 decades, and we're now just recovering. I think, yeah, one could argue and say it is, it is a structural. It is positively structural, right? At the end of the day, defense is all built in dollars. Remember that. So in effect, you're playing a dollar play.
Perfect. So that kind of is what I am currently looking at actively, the defense sector. Again, the caveat to that is the fact that I've looked at the companies and I think they are richly valued. But at the same point of time, I tend to believe that with the geopolitical tensions that we are seeing across the board, these are companies which I might want to put some money to work with. The other macro play that I have is the long dollar. That I continue to believe that the dollar index would continue to gain strength over the next year or so. And my targets on the Dixie continue to be between 110 to 120 in the longer term. Again, that's just how I am looking at the macro space, and I might be proven completely wrong. Uh, but that's those are the two things that I'm currently bullish on.
Yeah, thanks, Naveen. So, Maya, which sectors apart from IT? Obviously, we will also love to know about the valuations in the IT sector, because different people don't close. Other people don't close it this sector so closely. So, we'd love to hear from you. What are the investable sectors you find have value at current point in time?
Yeah, I also kind of agree with Naveen on the defense, but to be very honest with you, if we plot a sector in a shape of a pyramid with all the entities like HL and Bharat Dynamics, sorry, I'm just taking names. I am not invested in any of the names. So frontline companies, if you place at the top of the pyramid, then you have the tier two, tier three proxies of those companies, right? So I would be more keen to look at which are those companies involved in, let's say, the technology building for the defense sector. Since I understand that sector relatively better than in any other sectors, I would be looking it from that perspective. So yes, that is one of the sectors I'm very interested in looking at. Of course, I mean the technology and the IT remains another sector which is kind of secular for me. Um, we have been talking about smart cars, connected cars, IoTs, and narrowband IoT solutions. We have been talking about 5G, for example, right? So you cannot have a working kind of let's say this entire ecosystem actually relies on a very base layer of a communication, right? And when it comes to communication, again, it's like an onion. There are many layers to peel. So communication is another sector which I am significantly bullish about. But again, you have to look at a sector from a perspective of where exactly value accrues, right? So if you look at, for example, the typical HTTP stack that we have in the tech, right? You have various stacks in your HTTP, right? So HTTP is just one of the protocols, and which operates at the application layer, right? So you have multiple layers, like there is a network layer, and then there are so many layers, right? So value typically accrues at the application layer level, right? So the same kind of applies in communication with a small twist. Is the companies who have capabilities to indigenously manufacture infrastructure for communication and the 5G overlays over 4G bands, because that's what we will see in India. And companies who can, basically indigenously develop the infrastructure and also write the software to run that infrastructure at an optimum level. If you look at why, I'm just giving an example. So if you look at GCP and AWS, why AWS is doing so better over GCP. So of course, first is GCP is, kind of, it's a catch-up game. But leaving that aside, AWS is developing their own Graviton chips, and they're writing the software to run those chips, right? So you understand how the hardware is designed, you can write a better software to run it, So that way, there are some players also in India who are involved in that aspect, where they are indigenously manufacturing their own hardware, also writing software to run that hardware at the optimum level. So all these space around ORAN and SDN, software defined networks, which is a part of a communication at the application layer. This segment I'm very extremely bullish about, because you cannot have a connected cars and driver assisted cars or a computer vision or a metaverse or whatever you're talking about. You cannot have that unless you have a very robust communication layer actually operating at the base of everything. So I'm not bullish per se on the telecom operators, but when it comes to communication as a layer, I'm very bullish about that sector. So that's probably the third sector.
Yeah, thanks, Amia. So, Amia, we have one question for you from Vibor Vash. He's asking, what percent of ER&D contracts for Indian companies like HCL, LTTS, etc., come from US and the Europe? And how are their earnings going to be impacted by Europe situation in the medium term and impact on contracts?
Well, majority of the contracts are again from US. Of course, there are some companies like KPIT who have increasingly higher percentage coming from Europe. But the nature of contract is a little different. It's too early to see what kind of impact will there be. But I think, since majority of the contracts or a majority of the margin contributing contracts come from primarily from US, so there will be bump to the companies who are primarily operating in European markets. But to be very honest with you, I'm working in the segment, very actively involved here in the recruitment activities as well, here in not only in Germany but across the Europe as well. The kind of recruitment that is currently going on, I don't see, what kind of budget cuts or what kind of bump will we see. So as of now, there is nothing. But if you look at HCL, ELXSI, LTTS, they have a significant revenue coming from US markets, and not very high contribution coming as such from the European companies. The primary reason is, if you look at the way Bosch, Siemens, and some of the other core technology companies that are operating out of Europe, Volkswagen, these companies have been very vocal that they want to move in the significant part of their technology development in house. Even Volkswagen CEO was very vocal that by 2025 we would like to see at least 80% of the software that goes in our EV should be written internally. So that is another trend which is very strongly emerging in Europe. We are seeing some of the captive talent pools building up very aggressively. Some of the retailers also in Europe doing that, not only the technology or the ER&D customers, but some of the retailers are also doing that here in Europe. But let's see. I mean, that's how it is at the moment.
Yeah, thank you. So we have two speakers with us. Anubhav, you can unmute and ask a question from the speakers.
Good evening, sir. Am I audible?
Yeah, yeah.
Sir, I am new to the market. Sir, I am tracking the pharma sector and the chemical sector. So, what I understand that there are three types of chemical sub-segments in India, like bulk chemical, commodity, and the specialty chemical. But some companies they regard themselves as a specialty chemical. So, but they are not valued as a specialty chemical as the management says. So, how to understand the workings of the company in what type of chemicals they are producing actually? So if anyone can clarify my answer. Thank you.
Yeah, fact finder, Ameya, Naveen, any one of you guys want to take this?
Sorry, chemicals is not my forte, so I'll pass.
Me too. Chemicals is not my forte, but the only question I want to ask you is that ask the a person is asking the question is the person a chemistry student? Because it is to actually make a judgment. See, at the end of the day, right? Chemical stocks have become a fancy. But just look at the data. I mean, in terms of are we? I mean, how much of the growth of chemical stocks revenues have actually come from volumes, and how much has it come from price increases? Right, and yes, obviously there is an entire discussion about the Europe plus one, because Europe is seeing this entire disruption because of energy, and there's bound to see a bit of that business coming to India. Plus, of course, China is progressively reducing pollution in their country, and we are obviously increasing it in our country by having these chemical companies. But having said all of that, a lot of these chemical companies are trading at multiples which are like FMCG companies. But if you look at their return on capital and look at the volume growth of these industries, they are not very significant. So if I may to say, this is a sector that's already been discovered for the last 4 or 5 years, and I think that if you're trying to make alpha out here, one, you need to really go in depth into chemistry. Two, keep in mind that this is a very well discovered sector. And three, the valuations are such they already building in a very rosy picture, and hence you might be disappointed.
Okay. Yeah, Ramesh, you can unmute and ask a question. Yeah. Ramesh, if you can hear us, you can unmute and ask your question. So in the meantime, I have got one message and that outlook on Excite batteries. So anyone from the panel, if they are, I mean, they know the fundamentals or maybe the business outlook of it, they may want to share their views.
Yes, Sama. I don't have any questions. Thank you for giving.
Prince, there was a
So mistaken.
sorry, there was a question on Excite batteries. What was the question?
He's asking about the overview, basically, on the whole business as a whole.
I don't know much about exactly Excite, but I can certainly talk about why. I mean, I don't know the nitty gritties of them, but I can certainly talk to um, why why it'll be difficult for them to win. Would that be okay?
Great, Moj, go ahead. Yeah.
Okay. Um, so what you got to understand is what is a battery and what's its importance, right? So I mean, there are many differences, but if we keep it like really at a high level, the difference between an EV and an ICE vehicle is essentially you are replacing the engine and bit of drivetrain as well with uh, with essentially the battery. So instead of the power or the torque being provided here by the engine, it will be provided by the battery. Okay, what that means is for the OEMs, wherein engine was the main differentiator. Okay, so you would say, you know what, I'll go for BMW because the engine is awesome. Well, that no more exists, right? If we all move to EV, for example. So what these guys are trying to do is essentially keep batteries really close to their heart and essentially integrate massively, as I think Ameya talked about the integration aspect. So integrate the battery, including the software and the hardware, where software being the battery management system, including the thermals of it and whatnot, very, very closely. What that means is either they'll do it in house, which quite a lot of them are, or they'll try and have super tight contracts, pretty much closer to in house rather than just outsourcing with certain of the companies. So what you really need to look at companies who have massive tie-ups with the OEMs in the battery space. So or OEMs are doing it themselves. I haven't seen either Amara Raja or Exide or quite a lot of these Indian companies having any sort of tie-up with the OEM. These are not the batteries, but so these are like the lithium ion batteries, which are quite different from the lead acid batteries that these guys are used to. So not only that they're dealing with the change in the chemistry, but also a complete change in the view the ecosystem is looked at. So until and unless they are able to crack an OEM, which is really really tricky, it would be very difficult. I mean, I'm happy to take any questions or dive deeper into certain details, but that's at a very high level my view.
Thank you, sir. It's simple investor here, a sample investor here. I asked the question. I'm audible, right? Sorry.
Yeah.
Yes,
Yeah.
yes.
Yes. See, I actually basically asked on Exide Industries as you answered. Right now, they have some good market share in two-wheeler and other storage segments. But since they acquired Next Charge, in Gujarat, they have a lithium ion manufacturing facility. I think they got around some 200, 300 crore worth of production or contract for next 12 months, I say. And then, but there was one disadvantage for them. They were importing lithium ion cells from China. Due to that, they were having a cost of 70% just because of lithium ion cell import. Right now they are trying to set up a factory in Bangalore too, which basically manufactures only lithium ion cells. So I feel that they are trying to enter each and every space. Obviously even then they need to import lithium ion from China. There is nothing to hide over there. But still, if you compare to Amar Raja batteries, it seems like, as we know, the Jaidev Galla is from TDP and his political party is not in power anymore. And EPS and all those things are also not favorable for them. So I felt if you compare both of them, Exide is better. But yes, as you said, they don't have much OEM contracts as of now in India. But what I felt is if they have their steps correctly, they can have good contracts in future. Is what I thought. Yeah.
Just one point I wanted to say, sample. See, I'll just give you a global perspective on this. One is I wouldn't focus too much on EVs because honestly, except for the two-wheeler space, and there is one of the issues of EVs, I will tell you. But in general, EVs, if you're looking at passenger vehicles, I think that people are hugely overestimating the market share gains on passenger vehicles, at least in India. As far as Exide is concerned, traditionally Exide used to make a lot of money on their replacement of the batteries, right? They don't really make much money on the sales to OEMs. The margins there are very very low. It's essentially when you as a customer want to change a battery after 3-4 years, that's when it's like a spare part, right? If example, Bajaj Auto makes as much money on spare parts as they make on the entire domestic two-wheeler sales. Okay. So essentially, that's the way you look at it for Excite as well as Amaraja. Unfortunately, if people are taking a slightly longer term view in terms, and the industry, as I had mentioned earlier, for example, passenger vehicles, that sales has not grown for 5 years, right? Two wheeler sales, that has not happened for 10 years, which is one of the reasons why your base of product picked up in a big way, which is why these companies are not seeing much growth. I don't think the issue right now for their growth is because of EVs. That's an icing on the cake. The issue is that the industry was not growing, so these guys were not growing. The second part I wanted to say from a global perspective is if you have a company like Cattle, which is the leading one of the leading EV battery manufacturers in the world, and you have also another company that recently listed, I think it was the largest IPO in the world. This time was LG Energy Systems. It was a $10 billion IPO. That company doesn't make free cash flow. They don't. I'm just saying that if these companies were to try and emulate the battery companies in other markets, they will not make free cash flow, and I don't think the market will like it. I just wanted to share that perspective.
Sure. Thank you.
Mohit, one question to you regarding this EV. Do you think they need to change over the make of battery making once they move to EV, or the same make of what they are doing it for diesel and petrol engines, the same make is there for electric vehicles also?
Complete change, not even near that. So what you got to understand is they made lead acid batteries, which is a completely different chemistry, and here we are talking of lithium ion batteries. And what you got to understand is lithium ion batteries are uh, are essentially made at the cell level. And there is I think, if I'm not wrong, and this was certainly true a quarter back, there are no cell manufacturers for lithium ion in India. So battery is essentially a aggregation of cells which are majorly imported from bigger companies like LG Chem or CATL, and some others, Samsung to an extent as well, from either China, Korea, or Taiwan. Taiwan not so much, but majorly China and Korea. And all what they do in India is essentially assemble it. Okay, put it in the right formation. That's exactly what Ola is doing. That's exactly what everyone else is doing, because putting a factory in itself is a very big deal. Think it next. The nearest analogy that I can give to you is semiconductors, and there will need to be an innovation into all of this very closely, and the costs will have to come down. So you not only will have to be on the leading edge of innovation, but also need to bring in massive efficiencies, which is easier said than done. So completely different, not even close. And that's what the issue is, which people are going to struggle with.
Thanks.
So, Mia, not to be stock specific, but would you like to share your views on the current valuation of Tata Elxsi? Or-
No, not really. I mean, people are wise enough to understand that aspect, really, right? So, I mean,
Okay,
what can I comment about it?
let me change the question. Like, how you see the outlook going forward from here?
Business and price are two different things. I don't think there is any dent that ELXSI will see on the business front. In fact, they have achieved this delivery maturity recently, a couple of years ago. So you will see some of the margin still sticking to them. But price wise, it's beyond insanity, to be very honest. I know people would hate me when I say this, But I can't imagine any technology company trading beyond 80 90 P. And I understand this aspect very well, that you don't look at P. There are many aspects when it comes to valuation and all that. But this has to stop somewhere. But to be honest, as of now, it's beyond describing something that you can't put in words.
Yeah, I'd like to add something on Tata Elxsi specifically. Essentially, what's really interesting is that domestic institutional investors, X of LIC, kept selling the stock, and I'm sure they have very high quality research teams that would understand this business. And but at the same time, for some reason, the biggest life insurer in this country, which is a PSU, decided to keep buying the stock. And you know what happened after that. And eventually, because the valuations went up such that it got included in indices like the MSCI and various other indices. And that one needs to understand, and I'll give you a very interesting anecdote. People hugely underestimate the impact of index inclusion. I will give you one of the best examples to think about. Tesla got added to the US S&P 500, I think, in the year 2020. And this was, I think, announced sometime in August 2020. And what happened is that because of the addition to the US S&P, the total ETF buying that was required, and this was supposed to be implemented sometime in November, December, the total ETF buying was greater than the float available X of the promoter and X of existing institutional investors, long-term investors. So there was not much float. So when your ETF has to buy, they don't care about valuations. They have to buy, they will buy. And in fact, I will also give you another example of Amazon. Amazon, if you were to exclude the promoter holding, and this was data that was picked up, almost a year and a half ago, almost 70% of their float was owned, X of the promoter was owned by ETFs. Now, one needs to understand why ETFs are important. ETFs don't buy and sell stocks based on valuation. So if markets go down, a traditional fund manager can buy a stock and provide buying support. When markets go up, stocks go up, yeah, traditional fund managers sell a stock and then provide some sort of a, you know, it pushes down or prevents the crazy movement of the stock. Unfortunately, if a large part of your, and as an Amazon, which is such a large company, where 70% of their float X of the promoter was owned by ETFs, then you know what will happen when more and more and world over movement is happening from away from active to ETFs. So I just wanted to give that perspective, that ETFs, there is a huge number of people who are explicitly, at least in India, and I know that for a fact, are explicitly targeting moving stocks into the MSCI or the index thresholds, and eventually it gets bought by the ETF because the ETF doesn't have a choice, and that rigs the stock price up. If you really want to compare growth, there are some Israeli companies that have are super companies in terms of growth. They are growing at the rate of 35-40% for the last 15-20 quarters. I mean, there is no comparison versus Tata Elxsi, and they are at valuations which are cheaper than Tata Elxsi, far cheaper. I mean, talking about 40% CAGR, not for the last 10-15 quarters, and the forecast is the similar growth for the next 10 quarters, and they're cheaper, half as cheap as Tata Elxsi.
So, guys, we have another 5-10 minutes. So, anyone who have any questions on today's topic, or maybe fact finder or Samarth, Naveen, anything you guys have to add. So, we can do that. And if any questions from the audiences, they can comment or they can send in the speaker request.
I will just say one thing. You asked me at that time, Prince, about sectors. I also have a contrarian view at this moment of time on oil and gas, especially oil, because I actually, when I look at the data, issued by the IEA, they have something called the weekly data and they have the monthly data. The weekly data, it comes out quite often. The monthly data comes out with a 2.5 month lag. Uh, Now, the one of the reasons why crude oil corrected quite a bit is because the weekly data showed that consumption of gasoline in the U.S. actually was lower than COVID year of 2020, which seemed a little surprising given the fact that there were far more restrictions during 2020, at least in the US, versus what it is today. And if you look at the physical inventories and product inventories, it doesn't seem to suggest that demand has uh, fallen as dramatically as what the IEA weekly data is predicting. Now, it's also interesting that for the first time, there has been a substantial difference between what IEA reports on a weekly basis versus the monthly data, and so the weekly data eventually gets corrected, but with a 2 month lag. And if you've seen the correction in crude oil, it's primarily been over the last 2 months. So my suspicion is that there is a game being played. There is a huge disconnect in several commodities between the real market, the physical market, and the paper market. As we get into the winter, given how the prices of electricity or how the prices of the gas is, you will have some movement away from gas towards fuel oil, which will drive higher consumption of crude oil. Also, bear in mind that in October, the US SPR supply of 1 million barrels a day reduces. What's also interesting is that the OPEC has actually come out saying that they might reduce production because they believe that they are using IEA against it, saying that if demand is low, we should reduce production, and that is interesting. So we will get to know about the July data, which was the most crucial data on gasoline demand. We'll get to know that only in September, and hopefully that will throw more light whether my suspicion is right that they've been faking data. That I wanted to just share that.
Right. So Ramanjit, you can unmute and.
Yeah, thanks, Prince. Actually, my question is for Amya. Hi, Amya. Uh, Actually, if I could just club in two questions. One, do you have any views on data centers given the recent regulations which would ask more and more companies that they store their data in India? And it's kind of uh, also an indicator of how much internet we are using. And secondly, regarding 5G, mm, I've been hearing that the indigenous, this mandate to use indigenous equipments is not going very well with some of the telecom operator, and they feel that they should have more options. Given the POC by some of Indian companies is not what was expected. So, do you know something more about it? How it's going for 5G, especially the manufacturing in India angle to it. Thanks.
Raman, I guess Maya got dropped and I couldn't see him in the, listeners also. So other panelists can take your question. Fact finder Naveen, Samarth, maybe.
I won't have a view on data centers. I'm sorry, I do not track the sector at all. So apologies for that.
I can just talk to you. You're right, Raman. And there is, I mean, I can just say that the use of data centers, essentially, data centers is nothing but, in effect, the use of energy, right? So, I mean, I kind of agree with you that the way government is going, you will have more and more, data centers in India, and it's a bright spot. But if I had to bet on any particular group for that, I would bet on Adani. I think that was the best way to play on data centers. The second point about 5G, let me just take an example of China. China has implemented 5G. There is no appreciable improvement in your revenue per customer or ARPU from the implementation of 5G. And I think that India is years behind China in terms of that. In fact, our 4G speed is like 3G speed in a lot of other markets. So, I think that, Indian companies will be very, very in terms of trying to invest in 5G. And moreover, if you're going to have only primarily two players actually in some sort of sense, investing in 5G, then you don't have the scale benefits of, equipment. So, on one side, you actually have a situation in China where you're not seeing improvement from 5G. And now here you're asking you to use different equipment. I think it's a non-starter. I hope that was helpful.
Yeah, Ramanjit, anything else you have on your side?
So, thanks, Frank Finder. In terms of data center, do you see any proxy plays? Any access and shovel play there? Maybe diesel gen sets, because it requires a lot of energy, and or cooling off equipments, instead of the entire data center. Do you see some specialized manufacturers in that area? Cables, maybe.
I'll be honest, I haven't looked at it in detail, but I think you hit the you're quite right. You just focus on the guys who supply equipment. Be it the guys air conditioning or diesel gensets, because you require backup. That's true. But I haven't done enough of work on this. But as I said, right, directly, if you want to play it, then there is nobody like Adani Group in this.
Okay, thanks a lot. Thanks, Prince.
So, guys, any closing remarks or anything else? We don't have any speaker requests, so we'll be closing in another 5-7 minutes. So, Fact Finder, Samarth, Naveen, any closing remarks? Or maybe Samarth, you didn't talk, so anything you have on your side?
Yeah. Uh, just two questions to Fact Finder, which is there in the timeline. That is, one is from Satish. Is asking Fact Finder that is amidst the prevailing economic conditions, pharma and healthcare seems to continue to benefit from tailwinds of non-discretionary spends and cyclical recovery from hospitals. So, any view on that? And second is the automotive ancillary. What's the future onwards?
See, as far as auto ancillaries is concerned, as I said earlier, that we have not had a great cycle in autos for so many years, right? I forgot to also mention that, for example, that commercial vehicles, right? Even if commercial vehicle, I mean, when I talk about commercial vehicles, I talk about mid and heavy commercial vehicles. Even if mid and heavy commercial vehicles sales grow at the rate of 25% for the next 4 years, okay, then I think we said essentially that even then, India's total capacity for tonnage capacity to transport stuff in India, that would have grown at the rate of 1% for the past 6-7 years. So that's in some sort of sense. So total tonnage capacity is all the vehicles that can run. So that is finally, at the end of the day, the most important factor. In order to achieve just a 1% growth, your commercial vehicle sales have to grow at 25%, because you've gone through a down cycle for so long. So any way you cut it, uh, you know auto sales have to go up because they've been in such a bad patch for so long. and that will obviously help auto component companies. Uh, the second part, but again, the largest auto component companies, if they have any exposure to Europe, I'd be very worried about it. I don't want to mention specific names. And sorry, what was your other question?
The pharmaceutical sector as an discretionary spend, seeing the overall
Yeah, I think
atmosphere.
if you look at the data from so the pharma sector, there are a couple of consultants, AOICD, which give out data on, as well as some of the domestic guys, they give out data on splitting up into three parts. One is volume, one is pricing, and I think one is variation as well. And what is interesting is that you know the volume growth has not been really great, but the pricing has been fairly good. And so I think that also there was a slight change in regulation recently that has been announced. I think is quite will have a very significant impact, but I need to read in detail. But let me put it this way to you: a lot of the companies in India who service the domestic sector, okay, they are like FMCG companies, and hence I would look at it as FMCG quasi pays. Nobody cuts down on expenditure on medication. They will cut down on FMCG stuff, but not on medication. And these guys have the pricing power. But there is a change in regulation that was announced only recently. I haven't gone through it in detail, but it could have big ramifications for the sector. But the best guy, honestly, on this out here to listen to is the guy from Incred. I mean, his stuff is good. His understanding of the sector is very good.
Yeah, you are talking about Aditya Khemka, right?
Yeah.
Indeed, a great pharma expert, beyond doubt. Yeah. So we have two more questions, Samar, Amit ji and Sanju. We have with us, so they can go one by one.
Yeah, thank you, Prince. I have a question for Fact Finder. What are your views, Fact Finder, on companies like delivery and the sector in which they operate?
See, in case of I would like to differentiate between delivery and the typical food delivery guys, right? Uh, so delivery again is very tech driven. Okay, and because the segment is so unorganized, they've been able to gain massive market share. They effectively are again a play on e-commerce, as well as the fact that you also have a lot of mom and pops who are trying out selling products. So I would just simply say that a lot of the traditional companies in the logistics space have been sleeping. These guys are not only the good thing is that because of they are very tech intensive. I think they are actually able to now start creating a new business line where they sell their software to other companies globally to use their platform. To run a logistics business. So I kind of like this company. It's also interesting. They are actually my juniors from college, but yeah, I think they are very. I wouldn't compare them to the food delivery companies. As far as the food delivery companies, I have a big issue with them, and the reason is that okay, so I'll tell you a very interesting thing. There are only about my view, and based on data points, is that India has only about uh, 25 to 30 million, tops 30 million people who have a annual household income, annual income of 6 lakh rupees a year, which is 50,000 a month. And if I were to put that in terms of families, that number would fall from about 30 million to only about 20 million. So essentially, India's target market for people who have the ability to spend for a lot of discretionary items is 20 million. And second issue that I have with food delivery companies is that there is automatic exploration that people in other markets in Asia, they consume and deliver food so often, and so the repetition in India will happen in a similar fashion. And I totally disagree with that, simply because of one reason, that uh, in Asia, people don't, in a lot of places, they don't even have kitchens in their house. They depend on going out for breakfast, lunch, and dinner and everything, because it's just much easier for them, and food is cheap. In India, I'm not saying food is not cheap, but the issue is that Indians like having food. They have a kitchen, they have a lot of utensils. So I think that to extrapolate what people are seeing in Asian markets and do it for India is a mistake. Second of all, our total addressable market is much smaller. And jumping from that, I also highlight, for instance, Nika. If you look at Nika back in December of look at the December quarterly presentation, and look at one data point, and just think about it. In December last year, we had the best time for weddings. In fact, if anybody was in India at that point of time, you could not get hotel rooms anywhere. You could not get flight tickets anywhere. I'm not saying that hotel rooms and flight tickets are representative of India. They are representative of only 0.3 or 0.5% of India. But I'm just saying that it was crazy in terms of number of weddings. Wedding venues were not available. And in that, and people obviously outfits, and they buy clothes, and so automatically one would have expected that Nika's fashion, at least the active users would have grown. Active users grew like 3% sequentially. That is pathetic, considering the fact that, and it was something like 15 million. So the issue, what people should look in when they think about India, is that your addressable market is not very big. It because and the best way to look at this data is to look at CIBIL reports. They actually tell you how many people have home loans in India, how many people have car loans in India. They don't tell you how many people have credit cards in India, but they tell you something interesting. They tell you how many people have personal loans in India. Now, bear in mind, typically the personal loan given by a bank, I'm not talking about MFI loans. I would like to differentiate between microfinance loans and personal loans. Microfinance loans are very different, but personal loans, if you look at that category, which usually falls under traditional retail banking, that will give you an idea of how many unique credit card holders are there. Typically there is a 1:1 ratio. So while we might have 75 million credit cards outstanding, the personal loan numbers could only be 20 million or 25 million. Then you can say, because typically a person will not get a personal loan from multiple banks.
Right.
Prince,
Yeah.
I would like to speak for the
Yes, Amit.
IR at some point.
Yes, Sanju, you can unmute and ask your question.
Yeah, I just did that. Thanks a lot, Fact Finder and Prince.
So,
Yeah, Amity,
Amity,
yeah.
Haji,
is
Haji.
it done, Amit?
No. I'm waiting for my turn. Can I go ahead?
Just one question to Sanju's question. Just one more important thing. In terms of delivery companies, the problem is that today your e-commerce guys, I'm talking about food delivery and everybody. What is happening is that I'll give you an example of Korea, right? Korea. There was this e-commerce company, and the largest e-commerce company out there. They entered food delivery, and overnight, because they decided to compensate their food delivery pricing, because of the fact that they have e-commerce, they within a year grab 30-40% market share, right? So that is the problem. So today, if you think about delivery, especially in groceries, everybody is becoming grocery, food, and everything else, and that is the big issue.
Right. Amity, you can ask next, and Fact Finder, please remind me. One person has asked views on the QSR space, so we'll be discussing that also.
Yes. Can I go ahead?
Yes, please.
Okay. So I have two questions. One is related to two specific micro sectors in a sense. One is the sugar industry, where I have shares of Renuka Sugar since I think I got them in April or something at like I think 40, 41 or whatever. And the other is of the micro sector. Micro sector in the sense that is small finance banking. So you have the space of uh, Equitas and Bandhan and AU and Ujjivan and whatnot, right? So one, and this is an open question. This is not specific. Not I'm not.
Amity,
Hanji.
just to interrupt, Bandhan is a scheduled commercial bank. It's not a small finance bank.
Oh, sorry. Okay, fine. Today it has become a scheduled commercial bank. Fair enough. But okay, so only for example the small finance bank space. My question is limited to that. Uh, for the sugar industry and the small finance bank industry, what is the take of the panel here, experts out here? Second question would be to directly to only on the last point that Fact Finder has said on Nika. Again, this is only like a follow up question on what he said again. That when he's what he said that yes, there was this sort of this burst of this wedding thing that happened. Hotels were booked, and uh, but it's one has to assume that it's not like people लोगों ने कपड़े नहीं खरीदे होंगे. लोगों ने कपड़े तो खरीदे ही होंगे ना. So maybe Nika should we assume that every time like why are we connecting this wedding space to Nika's performance directly when we don't know that is Nika, did Nika even is Nika even interested in that space? One. Secondly, मतलब ये मानना गलत होगा कि लोगों ने कपड़े नहीं खरीदे. लोगों ने कपड़े तो खरीदे ही होंगे, कहीं कहीं से तो ले होंगे. They must have done their purchases. Uh, how does that reflect on Nika's performance in that? So only a follow up on that. That's it. But my main concern is my first question is more important to be answered by whoever is willing to answer.
Yeah, Fact Finder, would you answer?
I'm not an expert on sugar. Okay, so I can't answer anything on sugar.
No, sugar and small finance was open for everybody else.
Yeah, I don't have a view. But the only thing is that I can just tell you that I am vehemently against the ethanol policy. I think it's the wrong policy. On your question about Nika, I'll just tell you what I was trying to get at. There is this other company that is in the wedding space that got recently listed. If you look at their numbers, so the point I was trying to make on Nika was Nika's got two businesses. One is their personal care business, right, which is the primary driver, and one is their fashion business. I was referring to the fashion business. What I'm saying is that when you are entering a new segment, since you have just entered the segment, it's only automatic that you see more and more customers onboarding. And the general assumption by most analysts when they're extrapolating numbers is that they're saying that India is such a large population, so this transacting customer base, especially on fashion, will grow. And that is since Nika caters to a little more expensive customer, they there is an extrapolation that they are even the transacting customers on their personal care will also explode. I'm putting a question mark on that, saying that the total addressable market is not as big as people make it out to be. And the first sign of that was during the December quarter, when their fashion vertical, not their personal care vertical, their fashion vertical did not see any significant increase in the number of customers who were onboarding and transacting. It is very, very disappointing in terms of the sequential growth that happened. When the rest of the industry that caters to fashion, like the wedding company that got recently listed, where they were showing stellar numbers, right? Uh, so I just wanted to make that point. Sorry, what was your other question? Small banks, small finance banks.
Fair enough. Yeah. Fine. Point taken on the Nika.
Yeah.
But if you and others can, I would really like if all people who are willing to pitch in on the point of sugar and small finance banks.
Sugar,
Would you put the same
Amiti,
category of small finance banks and microfinance? Are you differentiating between the two?
No, for me they are the same. They're not very different, according to me. By microfinance, according to me, small finance and microfinance aren't very different because the markets, the way I see it, are really not very different. They are the same. The way I look, okay, so since you asked me the question, I'm interested in the space of microfinance and small finance, which according to me, they are not very different because the risk of NPAs is far lesser. It's so I something tells me that there is a potential in this space. Now, and you can separate them. That's fine, and I would love to be corrected as well. I would love to have opinion on those as well. I have certain outlook on that. But the idea that the fact that the distribution of their loans is more spread out and more the spread of the distribution of the loans is far wide and far more is like the individual ticket size are smaller. That just makes it more that makes it less risky in that sense. So only from that perspective I find this space quite interesting, which is what I wanted the opinion of the experts on. And sugar specifically, I take your point, fact checker. The key again, this is just it's like your opinion versus somebody else's opinion. Yes, so I'm looking at this space only because there is a policy now. There is a policy of where the government is getting quite well, quote unquote aggressive with the ethanol blend with the petrol and all of that stuff. And in that sense, I something tells me that this could be a growing sector. And also, there's गन्ने के खेती का के ऊपर anyways बहुत politics चलता है. तो in the last few years, it's gotten a little more sort of aggressive. So it just feels like in a very interesting space in a sense of where I see uh, if the policy continues, if the technicals allow it, as in like the technology allows it, uh, then this space I feel could see some growth. That's my outlook, and which is why I wanted the opinion of experts.
Hello.
yeah, Amiti,
Yes, sir.
yeah, वाजपेयी जी आपको बोलना है?
I'm listening.
नहीं नहीं समझिए, आप पहले अपना व्यू दीजिए, फिर मैं भी
Yeah. Amiti, the microfinance sector, if you classify, that is, they have grown out and become a small finance bank at a later stage. So they were actually microfinance. They're doing microfinance business. As such, it was somewhat risk-free. But once they come under the purview of RBI and became a small finance bank, the risk-taking appetite of SFB has increased nowadays. But the cap of giving loan by an SFB is around 2 CR max. Beyond 2 CR, they cannot lend an SFB. So, if you see the macroeconomic data, because that will be the judgmental point wherein the SFB will be profitable or not, because the number of delinquencies which the small finance bank will be getting in will be on the higher side, because the spread and the NIMs will be higher for Equitas or for the Bandhan Bank, because they have taken higher risk. And if you see the deposit rate also, they will be actually 0.5% or 1% more than HDFC Bank or ICICI Bank. So the risk taking appetite of an SFB will be actually higher than an HDFC or an ICICI. If you don't have an ITR also, they will give you loans, home loan, or if you say a personal loan, based on the net banking credit which is there. Okay. So if the economic overall condition is good, SFB will perform. But if the things at the lower end does not give you a good picture, rosy picture, then SFB will be in deep shit. That's my point. Second, you took names of Renuka Sugar and in this sugar space. Actually, Renuka, the main holding company is Wilmar International, which is holding Renuka right now, as of now. And Wilmar has already an Adani Wilmar, which is listed. So going on front, if you see the future will be, I think it will be acquired by Adani because the natural stint of being in the every sector by Adani, that is right now, which is apparent once they have also gone into the telecom space. So I think they will be there in the sugar space also. But this is my view. I don't know whether they will be going in that sector or not. Also, you
But
need to.
for the sugar sector, what would you
Yeah,
tell me?
yeah. I'm coming on that. Actually, what we see in the sugar sector is the long-term issue is the debts on the books, which is there right now in each and every company. Many few companies are there which are debt free. I think Balrampur and some one or two companies are debt free or have very minuscule amount of debt on their books, which is driving the total profit on the downside. If you have debt, it will not be a good thing for the company. So I agree with you that the policy is right now, in fact, in place by the government. But we need to see whether what all the companies are getting benefited, whether it is the UP-led sugar industry or whether it is the Maharashtra-led sugar industry, because these are the two bipolar units where
That's true. That's
sugar
true.
are
That's true.
mixing. So
That's a fair point. That's a fair point. Yes,
yeah, so we need to see, we need
within
to
the space,
categorize.
yes,
Yeah.
the companies versus the tropical, as in like UP and Maharashtra, ki wo divided to hai, definitely. I agree with that.
Yeah.
But
So
from the larger point, like uh, I understand what you're saying. You're being a bit, thoda sa, I think you're being a bit safe in trying to, like, whether should we uh, assume that the government policy will impact positively the sector or not. That's really my question, honestly. Like, I feel it. I think it will. It already has. We can see it, right? Like, and then,
one thing, Amiti, one thing is there. Being a commodity, okay, this will be there as a overall world space. If you see, it will be run by the prices which is there in the world, okay, like petrol and crude, sugar being a commodity. So they will have two choices: whether they need to export, whether they need to distribute it locally. So overall, the sugar, because this is a byproduct of the sugar cane, ethanol. So what are the MSPs which the government will be declaring every year? That will be there. Plus what all the government benefits which will be there all and along with the ethanol pricing. So it needs to be seen that way also, because governments do change frequently, and the policies are changed, and government can also change in the statewide. So we need to track that also, because there are many other factors which are there. So we need to take care of that also, sir. Yeah, fact finder.
fair answer, actually. I loved your response. Anybody else? I would really like other people's opinion also on these 2 points.
देखिए अमित जी, आपने जो शुगर सेक्टर के बारे में अपनी सोच बनाई है, तो फिलहाल गवर्नमेंट की जो परिवर्तित पॉलिसी है उसके हिसाब से आपकी पॉजिटिव है, बट इसका रिजल्ट आपको जनवरी के रिजल्ट जब आए, जब दिसंबर का रिजल्ट आएगा उसके बाद ही स्पष्ट हो पाएगा, है ना? क्योंकि ये जो रिसेंटली उन्होंने चेंज किया और नेक्स्ट प्राइस सेशन से थोड़ा सा उन्होंने जो छूट दी है शुगर कंपनीज को कि वो अपने केन जूस से शुगर के साथ साथ अगर शुगर के उनके पास एक्सेस प्रोडक्शन हो रहा है तो वो डायरेक्टली एथेनॉल भी बना सकती हैं। तो ये एक नई चीज इन्वेंट हुई है, और चूंकि अभी भी एथेनॉल की हमारे यहाँ डिमांड काफी है, कुछ इम्पोर्ट भी हो रहा है, तो अभी जब तक ये एथेनॉल फुल्ली सप्लाई नहीं इंडिया से होने लगता तब तक तो ये शुगर कंपनीज की पोजीशन बेहतर रहनी चाहिए। ऐसा जो आपकी सोच है उससे मैं भी सहमत हूँ, परंतु ये हमें कंफर्मेशन मिलेगा नया पेराई सत्र शुरू होने का, रिजल्ट जब आएगा उसके बाद ही स्पष्ट हो पाएगा। तो मैं तो आपको एक ये कहूंगा, हालांकि ये आपकी स्वीट बिल है, से आप रेणुका मिल गए, जैसा अभी समर जी ने कहा ना कि काफी कंपनियां डेट से डेट काफी है उनके ऊपर। जैसे रेणुका शुगर ने भी कुछ अपनी कैपेसिटी बढ़ाई है, तो उनका फिर इस क्वार्टर में लास्ट जो क्वार्टर है वहां पर भी उनका डेट और बढ़ा है। तो हो सकता है कि वो कैपेसिटी एक्सपेंशन में उनका पैसा खर्चा हुआ होगा। बट अगर शुगर सेक्टर में इंटरेस्टेड है तो कुछ ऐसी कंपनियों को आइडेंटिफाई करिए जो डेट फ्री हो या जिनमें लेस डेट हो, तो फिर उनकी जो है मतलब प्रॉफिट एकदम से इंक्रीज होगा, तो उसमें काफी अच्छा आपको प्रॉफिट मिल सकता है। लेकिन जिनमें डेट रहता है उनके साथ प्रॉब्लम ये है कि रेणुका अभी पिछले क्वार्टर में थोड़ा प्रॉफिट में आई थी, फिर इस क्वार्टर में उसको माइनस में हो गई। तो ऐसी स्थिति में जब तक वो प्रॉफिट में क्लियरली 2-3 क्वार्टर नहीं आएगी तब तक बहुत अच्छा रिजल्ट दे नहीं पाती हैं स्टॉक्स। बाकी तो हर व्यक्ति की अपनी स्वीट बिल है, बट कोशिश ये करिए कि डेट फ्री कंपनी में अगर आप रहेंगे तो सेक्टर वाइज मुझे तो ऐसा लगता है कि अभी इसमें काफी उम्मीद रखनी चाहिए, क्योंकि ये जो पॉलिसी नई आई है इससे कुछ ना कुछ परिवर्तन जरूर होगा और शुगर इंडस्ट्री इससे कुछ ना कुछ बेहतर रिजल्ट निकालने का प्रयास करेगी।
Yeah, fact finder.
Yeah, I just wanted to add something to his. So is the speaker there still?
I
Okay.
think yes, just repeated. Yes.
Okay, so I'll just give a couple of points. One is since he mentioned about, I look at it slightly. Just one, I'm not an expert in sugar or the ethanol industry, but let me just tell you one important thing. 40% of gasoline consumption in India is by two wheelers, right? Which is the sector which can hugely get impacted by EVs. It is the two wheeler sector, it is less the car sector, right? And so, if the replacement of vehicles happens faster on the two wheeler side, the demand for ethanol on one side is growing, but on one side the demand for gasoline blended ethanol also will decline. So one needs to also keep in mind this intricacy, right? Just want to highlight that on this MFI versus small finance banks, I like to differentiate. One is that typically an MFI loan will be a smaller ticket size. The MFI loans, you cannot digitize the collections as much because you have to meet the entire way it works is that you have to meet that person in the self-help group and try and use a local family or friend neighbor pressure to actually get money from that person. That's how it works. It's a very physical oriented business. You cannot digitize it easily. And the ticket size typically is less than 100,000. The moment it exceeds that, that person itself takes a much, he will be accessible to more banks. Secondly, remember one thing is you're catering to an MFI loan, you are catering to the most poorest people in the country. And I'll give you a very interesting data point that came out within ICICI Bank's results. In fact, have written a thread about it. They said in the last 2 years that their CASA used to be 55% from the top 150 cities. That share of CASA or current account savings account, which was 55% in the top 150 cities, and the remaining 45% was X of the top 150 cities, that ratio increased from 55 2 years ago to 75. So while we generally believe that as banks grow, the share of the top 150 cities will actually shrink. Here, the share has actually moved, not shrunk. It has actually increased from 55 to 75. And the reason that happened is because the poorer people across the country actually were drawing on their savings. So, which is why, and this one needs to just bear in mind that there is a maximum limit of how many women can borrow from the MFI sector, right? Because, I mean, my view is the maximum limit of the sector is about 100 million. You cannot go beyond that. So, if the industry has been adding at the rate of 10 million people a year, right, you reach a saturation point. So my view is that the MFI sector has reached or is close to reaching a saturation point. The moment it reaches there, what happens is that it becomes extremely aggressive, and then you have a big problem when there is a maybe an election in the east of India, or maybe some sort of bad monsoons or devastation that happens. That is you have a demonetization event. So I'm just saying, because the penetration of this industry is already so high, and the only way to grow is by giving more and more loans at a very high rate, you get hurt when things go bad. So I am not a great fan of MFI loans, because you're trying to make money on the poorest of the poor in India, and that is not something that is not sustainable. That's it. I wanted to just share that.
Uh, can I just ask a final question on the Fact Finders
Yeah,
last
yeah, please.
that so I understand where he's coming from, but what it's telling me is that, in a sense, that uh, and let me put it in the form of a question, that can we say that the microfinance and the small finance space could be a good barometer to measure our unorganized commercial space?
Sorry, what do you mean by
Like
unorganized commercial space?
for numbers that even the government is not able to bring out.
I think the best way to look at these numbers is, by the way, the lot of the PSU banks under the Mudra scheme do give loans that are very similar to the microfinance, except that they give those loans once and they don't give it again because the guy defaults. Well, in case of microfinance, and the rates are charged low, so once you miss out on that, eventually the PSU banks are very sticky. They will never ever lend to you, and so you go back to microfinance. So I don't think uh, Mudra loans is representative of that. You're right. You could say that MFIs are representative in some sort of sense. I feel one should look at more data points like two wheelers, like feature phones, to get an idea of the unorganized sector size in India.
Well, that's just one layer, but I was not talking about the only layer. But I want to thank everybody for answering my questions. I think I have a good understanding of the questions that I had in my head. I'm going to take myself down. Thank you very
Amity,
much.
you can also search in the balance sheet of Hindustan Bank. They had taken over Bharat Financial Inclusion, formerly known as SKS Finance, which was the biggest MFI loan distribution company in India. So you can see what they had done in their balance sheet of IndusInd Bank, and you can go ahead once you see that you will get a good idea of the overall scenario of MFI.
Oh, that's a good suggestion, sir. Very good suggestion. Mira, actually, I have my running account is with IndusInd in the last 13 years. लेकिन I was always somehow been scared of investing in the bank. But then, yeah, thank you for the suggestion.
Yeah.
Thank you. So Rahman, Ameya is back. So you were asking some question from Ameya. You can ask now.
Yeah, hi, Amya. Are you able to hear me?
Yes.
Okay, thanks. Amya, actually, I had, if I could just club two questions. One, do you have any views on the data center, how the ecosystem of data center is developing in India? And I'd be interested if you could, let me know what are the key components in it, apart from the whole economics of data center per se. I mean, in terms of it, I guess it requires a lot of coolants and air conditioning. And the second was on 5G, because I've been reading some reports on the Ken, and apparently Indian government has mandated that the vendors, especially the hardware vendor, have to be indigenous. But the telecom operator, I think they have apprehensions that the proof of concept is getting delayed. And do you have any take on the how it is developing? Are these delays or roadblocks normal? Given that I think some foreign companies also want to enter, but I think some regulations don't allow them yet.
Okay, so first of all, if we are talking about data center ecosystem, there are a couple of variables or couple of points that are very important. The data center ecosystem typically has a captive power, okay, because it's very important that you have to keep your data center running. Of course, there are technologies which are taking the computation to the end user's device, which is basically what we call the edge computing. But if we are talking specifically from the data center perspective, uh, you need only two things. One is the desirable power, and of course the space, right? So, which basically helps your customers to have multiple networks and multiple cloud providers, have a direct connection with the different hubs that you have geographically, right? So that is in order to allow various businesses from various sects, from various industries to coexist, right? So that's the key when it comes to the data center ecosystem. You should be able to, so co-location customers can basically, take advantage of various services that data centers usually usually offer, right? So yeah, I mean it's a commodity business. I understand there are some companies which are listed in India specifically offer the data center services. It's a commodity business, but what really differentiates one data center company from another is this: the captive power supply for the data center in order to ensure that you have 99.9999% uptime, and of course the space so that you can grow, right? So that is one of the aspects. I don't know if you're looking any specifically from any other aspect when it comes to the data center or not, but that's how the data center ecosystem is. Basically, these are the two variables on which everything resides. That is one thing. When it comes to the 5G, I believe you're talking about these private networks, right? Um, so, or I mean, from the regulation perspective, or from the recent example where Adani also bid for the 5G in the recent auction, I believe you are referring to that. Is it that specifically, or you are
I mean,
referring to something else?
no, not the spectrum bidding, but
Hmm.
the procurements of hardware. I think
Okay.
since Huawei is not allowed, but I've been reading
Ah,
that
okay.
some of operators, including BSNL, feels that they have been forced to go to Indian vendors while they're not ready to take up this Mammoth upgrade, and
Hmm.
the POC had been delayed. But on the other hand, I read a bit from Sankhya. I think Sankhya also procured some spectrum because they're testing some chip manufacturing or something. Not exactly chip manufacturing. I don't know what it would be called. And then you have Tejas, and then you have Tata, TCS. How do you see this in an overall way? How is this shaping up? Because from what I read, to be specific, I read on the Ken magazine that the whole development has been hitting roadblocks.
Well, I haven't read the article, so I really don't know what exactly roadblocks are we referring here. But
Mhm.
if you look at it, it's developing, it's taking a really good shape. So if you look at from the Tata's perspective, again, I may refer to the some names, and it's no way a recommendation. So just to understand the entire ecosystem and the industry structure, right?
Yeah.
So if you're looking at Tata, for example, so when it comes to the communication as a layer, so there are three layers to it, right? So you have a company which basically has the underwater connectivity, you have a terrestrial connectivity, and then you have a satellite connectivity, right? So Tata ecosystem as such covers all three aspects through three different companies. Then you also have Tata Digital, which basically cuts across all these three companies horizontally. And then you have Tata Electronics, which basically works in tandem with Shankhya and Tejas. So what Shankhya is currently, it's not really testing, but so in one of the con calls, they very clearly mentioned what this chip is about, right? So first of all, this chip has approximately $1 billion worth of target market cap. Um, And what it does is, so because of the previous infrastructure days where we had a line of sight communication, uh, so naturally when it comes to tower communication, it's always line of sight communication, right? So if we go back to those days, a lot of infrastructure is currently lying unused totally. And a lot of the, so if you look at the overall traffic on the spectrum as of now, more than 75 to 80% of the traffic is a video traffic. uh, if you have a technology that will make use of this terrestrial network, push this video traffic for the endpoint consumption between these two line of sight communication band, which is currently completely unused, you basically get rid of lot of stress that you would otherwise put on the existing bandwidth that you have, that can very easily be used for better purposes. And Shankya has that chip already. It's not in a POC. It's already a functional chip. I mean, you can go and listen to that con call, and you would understand what exactly are they doing about it. It will integrate with the so that chip will not be sold independently or individually as such, but it will be part of the Tejas networks base station infrastructure and the similar products that they have, right? So when it comes to 5G, you have to look at from a perspective that in order for 5G to work seamlessly at the speeds that we desire, you need a very strong base station connectivity, right? So the upgrade, that's where the upgrade starts. So you need a very strong fiber based connectivity, then you need a very strong infrastructure at the base station level. Then you have this 5G overlay on a 4G. That's what we call the mid band, right? So we are not even talking about the high band of the 5G here yet. We are talking about the mid band 5G, which is basically a 5G overlay on a 4G, right? So that's how it will actually develop, and the overall industry is taking a pretty beautiful shape in my view, the way things are going. And my only point of reference here is the way Tata is developing this industry, and they're taking all the right steps in all the right direction. And I believe, I don't know what roadblocks are there really. But if you look at the individual companies, there are two companies from this list I track very closely, and I see that because of the security concerns around Huawei and all that, one of the companies is able to replace a lot of Chinese manufacturers even in the European segment. So what does that mean is they are not only able to compete on a price, which is basically what when you compete with the China. So they are not only able to compete on a price level, but they are also able to compete on a technological level, right? So I really don't know whether those roadblocks, what kind of roadblocks those are, but just to sum it up, I think it's taking shape pretty good. I hope I answered that.
Yeah, you did actually, Amya. I had shared that article with you. It was a Ken article. I will do that once more. But I'm not harping on this point. But again, in terms of 5G, how do you see something like Cisco trying to onboard the 5G technology for India? So where do you find such players in that, if I could say, ecosystem which is right now getting created?
Well, I think because of what's happening is earlier when you had this existing legacy infrastructure, right? Uh, so whenever you for example deploy a radio access network or a RAN that we used to call, right? It was mandatory that one of the vendors who is deploying a RAN, he would basically be responsible to deploy it across all the spectrums. But basically, that's fundamentally changing with the ORAN and the SDNs and the on-chip network configurations, right? While I completely agree that Cisco is already has a lot of depth when it comes to the existing infrastructure, but just purely on the basis of indigenous manufacturer and all those aspects, I think it's pretty level playing field at the moment. When it comes to the technology or when it comes to the quality of the product, I don't see any significant drawdown or any significant deviations, because what happens is typically when you are bringing these products to market, there is a lot of turnaround time. There are a lot of various certifications and various approvals that you have to take, and it's not only Cisco. Everybody has to go through that, whoever is bringing such product or infrastructure in the market, right? So on the technology level, I don't see that as a challenge, to be very honest. uh, but I think given the kind of positioning Tata has domestically or even internationally, I think we'll see better expansion coming from the Tata companies. At least that's how I see it. We'll see how the other aspect around Cisco and Siemens also has some infrastructure in some percentage into that, but we'll see how that develops.
Hello, Ramanji. Actually, I want to answer your question on 5G. Actually, I'm working on that 5G technology, and I want to tell you that already, our local operators like Jio and Airtel, they have rewarded the contract. Actually, in India, to be very frank, there is no company which has a good 5G technology, actually core 5G technology. Even those company names, Tejas and all, which we hear about, they are mostly into supporting those technologies. If you see the actual technology leaders are like Ericsson, Nokia, not even Cisco. I will say that they are into more into networking, but yes, they are very close to it, but not exactly into the core technology area. So mostly they're the major players around the world, and in India are Ericsson, Nokia, Samsung. Though Huawei and ZTE are also very good player, but you know that. I mean, they are not getting. I mean, because whatever reasons, security reasons, they are not being allowed. But most of the contracts are already been rewarded to Ericsson and Nokia by major players like Jio and this thing Airtel. And also, I want to tell you, Jio is also trying to develop 5G technology, but research-wise, they have not spent so much money the way these European vendors, European companies have already spent, and they are ready. Rather, they are working on more speeder, higher, more efficient 5G. Rather, they are going into 6G, if we can term it like that. So, those are the major players which are already into the field. And in terms of, revenue, how this operator will gain, I will tell you in terms of ARPU, we will not able to measure it. Nowhere you can measure it, because 4G is good enough to provide normal or a very good video call, movies, and all those stuff. 4G is good enough. If quality is maintained, then it's much better. I mean, you can have all your the 5G will only come into picture, or it will give revenue to operator when we have connected equipments in our houses. So initially, I don't think that most of the general population in our country, everybody have connected fridge, connected equipment. I mean, washing machine and all those stuff. Maybe smart homes will come into a picture, but again, we are very cost conscious country. We may try to get this advantage in a form of a bundle that we want to pay it maybe 900 rupees, and we want to have that connectivity where all our connected devices, but and so that will be a problem initially. I mean, this connected device entry will take time, but yes, I mean, the enterprises, these companies, actual normal company, any consumer company, you say, from there they can make money, and those company can make their operations more efficient, their factories, the way of distribution, the data transfer between real time data transfer between various unit, various industry equipment. I mean, it will give an advantage, and from there, if this company can get a money, then only they can make some. But you can never measure in terms of ARPU very soon until we have connected devices. So Tejas and all these company will make money in terms of supporting these this 5G technology and all those stuff. They might have some supporting equipment or application kind of thing, which will be local to Indian usage or something like that. but not like a core. They are able to provide a core 5G technology, which these European companies, they have already got the contract, and soon you will see, maybe within a year or so, we will see that 5G is being launched in India in various part of the country. Maybe if they are very aggressive, within 6 or 7 months, you will see, at least in larger cities, where there is a good, where they think that they have some customer base. I mean, very premium one, with having connected, who can afford or can have connected devices, smart homes, and industry areas, and all those stuff. So that's all I can share with you, Ramanji. Hopefully, I'm clear.
Nivesh, brilliant stuff. I totally agree with you. Even China has not shown any evidence that ARPU has improved despite 5G.
So, guys, I think we are done with the questions and it's quite late. So, any closing remarks in 30 seconds from each of the speakers we can take, and then we can have another round of informative session again. So, and especially a request to the attendees, if you are liking our sessions, kindly visit handles of our speakers and mine, so that if you find value, you can connect, and down the line, when we host such sessions in the future, you get notification and you can attend those as well. Yeah, over to the speakers.
Yeah, Prince, thank you very much for conducting and hosting this space. And as usual, you have been very proactive in such things. And that's it. And thank you again, Fact Finder, for your views, and Naveen Joshi ji also. Just to add to Naveen Joshi about the defense sector, just look at the two companies, L&T and Mazgaon Dock, which I also track. So I'm quite positive about these two companies. No buy and sell recommendations. And yes, as a general disclaimer, none of the persons and the host, co-host, and the speakers are SEBI certified registered analysts. So any company name which has been taken during this course of time, please make due diligence before investing or trading in these companies. And we will not be responsible for any profit or loss which happens out of this thing. So that's a standard disclaimer. And thank you again, Prince. Thank you.
Hey, Prince and Samar, thanks a lot. You guys were very good hosts, and I like the way you guys conduct your sessions.
Thanks, guys. Thank you, Prince. Thank you, Samat sir. Thanks, Fact. It was actually truly very informative. I want to wish all of you a happy 75th Independence Day. I hope the government of today or tomorrow or whenever takes cognizance of what India faces at the current moment, and we get out of it on the other side stronger, better, and a better country for everyone. So have a great Independence Day. Enjoy yourselves, and yeah, thank you so much for having me on.
Yeah, thanks, Naveen. Ameya.
Thank you, Naveen.
Yes, Prince, thank you so much. And I really apologize for the technical issues. I wasn't able to connect for a long duration of time. So sincere apologies for that. Probably I will listen to the recordings down the line, and basically, try and understand what all topics were discussed. So looking forward to, many more similar spaces. It's always enriching to learn from so many, good guys that we already have here. Niveshak, Navinji, and always, as always, Fact Finder, you always add a perspective. My circle of competence has been very small compared, to kind of expertise that you guys have. So always looking forward to learn from you. Thank you so much. And also Mohit Bhai.
Hey, Amit, Ameya, come on, man. I think you're really good at what you do. You're an expert. Anyway, thanks a lot.
Nobody's expert.
Nivesh, I hope to see you often. Naveen, you're always good. Thanks, guys, for everything. And Wealth, you versus you as well.
Thank you, Fact Finder. Thanks, everyone. Thank you.
Thank you.
Thank you.
It was really nice,
Thank you,
and
guys.
an era in stock market ended today with the RJ sir left for heavenly abode. So this is a major shock for the industry as well. But again, life goes on. So with this, wish each and every one of you a very happy Independence Day in advance, and we may wish that India prosper like leaps and bounds, and we also learn together and make a great wealth over a period of time. And thank you for everyone who spared their time, and it was on a very short notice that Fact Finder has devised the idea of today's spaces, and Ameya and others agreed, and it was really nice. Ameya, Fact Finder, Samarth, Wealth First, Mohit, and Naveen, if I remember the name correctly, and all the speakers with good questions. So thank you everyone. Kindly follow our handle so that we can get in touch often. So thank you so much. With this, I take your leave. Good night. Thank you. Bye bye.